If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi, and welcome back to Courtside Financial, the podcast where we talk about business and technology. Sometimes we discuss these things mutually exclusive. Today, we're going to be talking about some interesting developments in the crypto and traditional trading markets. We're going to be talking about EV deliveries in China for the month of January, and we're even going to be talking about the Super Bowl, where all those ads dollars are flowing to. So it'll be a super interesting, super insightful video. If you're new to the channel, make sure you hit the subscribe button. We're almost at 8,000 subscribers. Our goal for the year is 10,000. Whether you're new or returning, make sure you hit the like button, notification bell icon, and share the video. All your engagement really does go a long way in helping out the channel, helping us to grow and reach a broader audience. And so without further ado, let's get into today's episode of the Courtside Financial Podcast. First up, let's talk about what's going on in the Chinese EV market, particularly around NIO. Now, as many of you know, I'm bullish on NIO, but today we have to have a serious conversation around their January delivery numbers, because to be quite frank, they don't look so good, in my opinion. Let me break this down for you. In January, NIO delivered 13,863 vehicles. And while that's a 38% year-over-year increase, it's down a staggering 55% from December. That's not just a dip, that's a cliff drop. So let's get into the specifics. The NIO main brand delivered 7,951 units, and that's actually down 21% year over year. Their new sub-brand, Envo, contributed to 5,912 units, down 44% from December. And total lifetime deliveries reached 685,427 vehicles. Now, I know what some of you are thinking, but Obi, it's the Chinese New Year. And yes, that's true. The holiday ran from January 28th to February 4th this year, and traditionally, it's the low point for deliveries in the Chinese auto market. But here's why that excuse doesn't fully hold water. Look at XPeng. They managed to deliver 30,350 vehicles in January. Yes, they were down 17% from December, but that's nowhere NIO's 55% drop. Li Auto delivered 29,927 units, and even Leap Motor, a smaller player, delivered 25,170 vehicles. All of these companies faced the same delivery period, yet their numbers tell a different story than NIO's. Here's where it gets interesting though. NIO clearly knows that they have to do something. They've just announced a pretty aggressive financing program, which we talked about yesterday. That's 0% interest financing for 5 years if you put down a down payment in February. This actually is a step up from their January offer of 3 years 0% interest financing. They're taking a play straight from Tesla's playbook, and while it might help out with sales, we need to watch closely how this is going to affect their margins. Let me put this into perspective for our international listeners. When we convert using the exchange rate of $1 being equivalent to about 7.2 RMB, we're talking about some significant financial commitments here. This kind of financing incentive is telling us that NIO is willing to take a hit on immediate profitability to maintain and grow market share. But it's a strategy that needs to deliver results fast. Now, speaking of market strategies, let me pivot to something interesting happening in the fintech space. There's this new app called Dub that's essentially trying to become the TikTok of investing. And their approach to market penetration is quite brilliant. Founded by Stephen Wang, this 23-year-old Harvard dropout who's been in the investing space since second grade, they've already hit 800,000 downloads and raised 17 million in seed funding. But here's where things get really interesting. They're letting users copy trade everything from hedge fund strategies to, and I kid you not, Nancy Pelosi's disclosed trade moves. And apparently Pelosi's portfolio is up 123%. Now, before you rush to go and copy her trades, let me explain how this platform actually works. For $10 a month, you get access to their basic features. But here's the clever part. They also have what they call top portfolios, which charge additional management fees, with Dub taking a 25% cut. It's a brilliant revenue model because they're focusing on monetization from day one, unlike many other startups who try to grow their user base and gain market share while simultaneously burning through a ton of cash. Now, Wang makes an interesting statement about why they chose this approach. He says, and I quote, "We've been really lucky where I think the broader American population really believes that there are other people out there that have an edge over them when it comes to the investing world." And honestly, he's not wrong. But this brings us to a crucial question. Is copy trading really the future of investing? Wang actually pushes back against the notion that passive and get investing beats active management. He points to successful hedge funds like Citadel, saying that if you look at what the ultra wealthy can do, they're giving money to Ken Griffin of Citadel because they're consistently putting up non-correlated returns year after year. Speaking of following people's financial moves, let me tell you a wild story that's going on in the crypto world. While Dub is trying to legitimize social trading, we're seeing some serious shenanigans with what people are calling celebrity meme coin. Picture this: Caitlyn Jenner launches a coin called Jenner. Within hours, it has a market cap of 46 million. Sounds great, right? Well, within days, it crashes 65%. But here's where the story gets interesting. Enter Sahil Arora, a self-proclaimed crypto entrepreneur from Dubai. This guy's background reads like a startup fever dream. He dropped out of high school to launch a startup taxi app to compete with Uber. That failed, and then he created Bitcoin ATMs, which got him featured in Forbes India. But what he's doing now, that's on another level entirely. Aurora allegedly orchestrated not just the Jenner launch, but similar launches with Floyd Mayweather Jr., Andrew Tate, and even tokens supposedly connected to Trump and Melania. His platform, Pump.Fun, and yes, that's really the name, has now registered over 3 million tokens. But here's where things get messy. A crypto sleuth named Nicholas Vyman started tracking these celebrities' coins after losing money in a similar scheme. Using software that he developed, Vyman traced the wallet patterns and found something disturbing. The same wallet address was being used across multiple celebrity token launches, all leading back to Aurora. Now, this brings us to a fascinating contrast in the fintech and financial world. While we're seeing these questionable crypto schemes, major brands are still betting on legitimate crypto and tech personalities. Just look at the upcoming Super Bowl ads. Meta's dropping some serious cash into featuring Chris Hemsworth and Chris Pratt promoting their smart glasses. David Beckham searching for his long-lost twin in a Stella Artois ad. We've got Shania Twain lending her voice to Coffee Mate's first ever Super Bowl commercial, and even a nostalgic reunion of Meg Ryan and Billy Crystal for Hellman's. What's particularly interesting is how these Super Bowl ads reflect how big money thinks about where consumers' attention is heading. We're seeing a heavy focus on tech and digital innovation packaged with familiar and trustworthy faces. It's almost like these brands are trying to bridge the gap between traditional celebrity trust and new technology adoption. Before we wrap up though, let's tie all this together. Whether we're looking at NIO's struggles and their aggressive financing response, Dub's attempt to democratize professional trading strategies, or the wildest of celebrity crypto tokens, we're seeing a clear theme. The financial world is becoming more social and more accessible, but also potentially dangerous for the uninformed investor. The contrast between legitimate innovation and questionable schemes has never been more stark. NIO's trying to maintain market share and grow it through traditional financing methods while trying to fend off competition. Dub's trying to democratize trading through traditional methods, while celebrity meme coins show us the darker side of financial democratization. Always do your research, stay informed, and never invest more than you can afford to lose. The market's evolving faster than ever, and while that creates additional opportunities, it also means that we have to be additionally vigilant. That's it for this episode of the Courtside Financial Podcast. I hope you found it useful, insightful, interesting, at the very least entertaining. If it was any of those things, click the notification bell icon, hit the subscribe button, leave a comment down below, and hit the like button. We'll see you in the next episode of the CF Podcast. Happy Sunday. Thanks for watching. Obi signing off. Bye.